We are in San Diego, California this afternoon for a conversation with Warren Buffett. He is the man congressional leaders, the administration, and the Federal Reserve want to talk and talk to. He is the legendary chairman and CEO of Berkshire Hathaway. Its success has made him the world's richest man. He's admired for his investment results over a long period of time. He is trusted for his common sense and the fact that he has warned over the years in his annual letter to stockholders about some of the things that are contributing to the crisis facing America and the global economy. For all those reasons, we have come to see him in San Diego, where he is attending the Fortune magazine's Most Powerful Women Summit. Later, he will be interviewed at that conference by the Fortune reporter and longtime friend Carol Loomis. We come this evening from the studios of our public television affiliate in San Diego, KPBS. I thank my friend Warren Buffett for taking time in a busy schedule to talk to us.
My pleasure, Charlie.
Let me talk with the news of today. You have announced an investment of $3 billion in General Electric, along the same terms as the Goldman Sachs investment.
Almost identical. Mm-hmm.
Right. Why GE?
Well, I got a call this morning from a friend of mine at Goldman Sachs saying they might be interested in such an investment. I'm familiar with the company. I've known the management, the current management, Jack Welch before Jeff Immelt. I've known them for decades. And so I understand their businesses. We do a lot of business with them. And, GE is going to, I think it's the longest running stock in the Dow Jones Industrial Average. It'll be 100 years from now. It'll be around. I hope I'm around then, too. And it was an attractive investment. And we've had a lot of money around over the last few years, and we're seeing some things that are attractive now.
Are you looking at other things?
I look at everything, Charlie. That's my job. I really do. I mean, every day. I'm thinking about everything, yeah.
I know. But cash is said to be king now. I mean, are you sitting on a lot of cash so that this is a time for Berkshire Hathaway and Warren Buffett to look carefully at a lot of opportunities?
Yeah, we want to use cash. The reason we haven't used our cash a few years ago, we just didn't find things that were that attractive. But when people talk about cash being king, it's not king if it just sits there and never does anything. There are times when cash buys more than other times, and this is one of the times when it buys a fair amount more, and so we use it.
There's a time to accumulate and a time to spend.
Absolutely. Yeah, you want to be greedy when others are fearful, and you want to be fearful when others are greedy. It's that simple.
And where are they now? Fearful?
They're pretty fearful. Yes. In fact, I in my adult lifetime, I don't think I've ever seen people as fearful economically as they are right now.
And why is that, you think?
Well, it's because they have seen the credit market seize up. They've gotten worried about money market funds, although the latest proposition from government should take care of that. They've seen 8% of the bank deposits in the United States get moved very skillfully, I might say, within the last couple of weeks from institutions that they thought were fine a few months ago to other institutions. I mean, they are not wrong to be worried.
Is it being felt, as people often point out, on Main Street?
Well, it's being, I read about auto sales today. I mean, if you're an auto dealer, you're feeling it. If you're a furniture retailer like we are, you're feeling it. If you're a jewelry retailer, you're feeling it. I know some of these businesses because we're in them. Yeah, it's being felt, but it'll be felt big time more if we don't do something about it. What's going on?
The Senate will vote sometime this evening.
Right.
Are you satisfied with that rescue plan?
Well, I don't think it's perfect, but I don't know that I could draw one that's perfect. But I'd rather be approximately right than precisely wrong. And it'd be precisely wrong to turn it down. And we have a terrific economy. It's like a great athlete that's had a cardiac arrest, and it's flat on the floor. And the paramedics have arrived, and they shouldn't argue about whether they put the resuscitation equipment, a quarter of an inch this way or a quarter of an inch that way, or they shouldn't start criticizing the patient because he didn't have blood pressure tests or something like that. They should do what's needed right now, and I think they will. And I think the Congress will do the right thing. I think that they get into certain arguments and they start worrying about assessing blame, and there's a little demagoguery. But in the end, something this important, they'll do the right thing. This really is an economic Pearl Harbor. That sounds melodramatic, but I've never used that phrase before, and this really is one.
But go through why that is true, beyond the fact that there's a freeze on credit, beyond the fact that nobody's making loans, beyond the fact that banks don't lend to banks, beyond the fact that Treasury bills are at a low.
Yeah, when 40 billion of Treasury bills are sold like they were last week, 7-day Treasury bills, at a yield of 1/20th of 1%, that means the whole country is basically at the point virtually, or a lot of the country is at the point of putting their money under the mattress. I mean, you're only 1/20th of 1% away from where it's better to put it under the mattress. You don't want 300 million Americans putting their money under the mattress. I mean, this economy doesn't work well without the lubrication of credit and trust, and that's been lost. And it's a huge problem. What you have is you have the major institutions of the world all wanting to deleverage. They want to take down their assets and liabilities. They want to, what seemed so easy to borrow against a year ago, now it looks like rat poison to them. So they're trying to deleverage. There is only one institution in the world that can leverage up in a way that's at all a countervailing force to that. That's the United States Treasury.
Are you approving of what has been taking place along the stages that got us to where we are now?
Well,
whether it's Bear Stearns or Lehman Brothers or AIG or Freddie and Fannie or what you've done with Goldman Sachs and the rest.
Yeah, I think that basically the right things have been done, but no one saw the tsunami coming, fully. And so when Bear Stearns came along, it looked like if you stopped the flood at that point, you didn't have to worry about being downstream from it. And I think the Fed did the right thing there. And I really thought that would probably halt runs on other major institutions, but it didn't. We have seen wave after wave. And admittedly, there's been somewhat of an ad hoc response to it. But I'd rather have an ad hoc response than no response at all. And I don't think the Treasury could remotely have gone to Congress 3 or 4 months ago and laid out the scenario of what's happened and been credible and gotten the necessary tools. I think it took a crisis like this.
And asking for the power it's asking for and the levels it was asking for.
No, they wouldn't have gotten it. So I think it's been, kind of like a tragic play to this point. But at this point, I think it's clear, and will be clear to a majority of the Congress, I think it's clear to the American people, that there is only one countervailing force to a world where financial institutions are trying to sell instruments every day and where credit has dried up, and that's the United States Treasury.
But at the same time, there has been, and Congressmen and women will tell you this, a resistance across the country because they think, as you well know, it's a bailout of Wall Street, and that they are sitting there in their own economic life, and nobody's coming along to say, we're here to help you, we're from the government.
Yeah. Well, the patient that's on the floor with a cardiac arrest is not Wall Street, it's the American economy. I mean,
do you think they understand that yet? Because that's the question of communication.
I think they probably don't, and I think anytime you couple the term Wall Street with bailout or something like that, I don't like what's going on at Wall Street. I don't like what's going on in executive compensation. But I don't want to give a lecture to this body that's out there, having had the heart attack. I want to get it back functioning. And as a practical matter, I mean, if you were at Bear Stearns and you were a shareholder, you lost 90 to 95% of your money. A good many lost their jobs. They lost very cushy lives, many of them. If you were at Lehman, the same thing happened. If you were at AIG, the shareholders are getting creamed on these things, and those shareholders are not just a bunch of big shots in Wall Street. Those are pension funds, and those are investors all over the country. I wouldn't worry too much about that. Justice won't be perfect on it. I mean, you may be very mad at some guy that walked away with a huge golden parachute, but that really isn't the important thing. I mean, if Pearl Harbor came along, you could have said the planning was wrong by the military ahead of time, or maybe the battleship shouldn't have all been in the harbor and all that kind of thing. Right. It doesn't make any difference.
It's the
job, it's Pearl Harbor, and you better not spend weeks and weeks and weeks trying to assign blame or deciding on a complete plan for fighting the whole war, and letting a committee decide where the battleship should go and all of that. You better spring into action with the best people you have.
You have never seen anything like this in your life.
No, I haven't.
Yeah. There are those who argue that we're headed for a recession, and they look at depression as the great fear.
Sure.
Is that a possibility if this plan doesn't work?
Yeah, it's a possibility. Yeah, we have about 6.1% unemployment now. We've been in a recession by any common sense definition, because if you look at the American public, they've got 20 trillion, I should say, worth of residential homes. They got 20 trillion worth of stocks, very roughly. Those are the two big assets of American families. They're both down dramatically, different for different families. But 95% of the people, at least, are worse off in terms of their residential wealth plus stock wealth from a year ago or 2 years ago. That is bleeding into the real economy. I mean, that's bleeding into auto sales and jewelry sales and furniture sales and all that. But that wave is just starting to hit. And if the paralysis we have in the credit markets, if every company continues to feel all we want to do is get our balance sheet down, sell assets, it's